man, I cannot believe I'm doing a podcast with the JT Crits. It's unbelievable.
That's a big introduction. I'm honored to be here, Alex.
Yeah, I mean, it's not every day you get the director of marketing on the podcast. So I'm happy you're here, man.
Hey, man, it was always a concept for you. I mean, you've already been doing podcasts, and my thing is kind of upping the production quality a little bit, but it's easy when you got great talent. So.
Well, I appreciate that. I would say my talent on a scale of 1 to 10 is probably like a 2 or 3. So
hey, man, you do it all,
you're trying to improve it, man. Trying to improve it.
Dynamic loan officer, and then you're also doing full-time marketing on the side. It's awesome.
That is full-time is definitely a overstatement. But I try to dedicate a couple hours a day to it, which is important.
It's what's needed, man. And we work with a lot of loan officers, and a lot of the loan officers are a little bit older, and so they kind of struggle with the marketing aspect of it. But we're in a world right now where you better be doing both. Everybody wants to be out there, but it's a full-time job. You got to put in the time and effort if you want to really get your name out there.
Yeah, you really have to learn. Just take the time to learn about it. Like when it comes to TikTok, YouTube Shorts, Instagram Reels, podcasts, anything like that. Just take the time to see what other people are doing. Kind of look and look at what the leaders in that hashtag or niche or industry are doing. And that gives you a good idea of what people like, what people are engaged in. And you can kind of format your content somewhat using their blueprint, because, a way video is produced or way podcast produced. You can kind of take that and use that for your own, creativity.
Yeah, it's overwhelming for some people. There's so many different mediums out there, and there's levels of marketing. You can go surface level. You can just get something out there.
Yeah.
Then you can dive into advertising, and then, forms and filling out forms and automated campaigns. And so there's definitely levels to marketing. But my whole thing is that do what is sustainable for you. If you don't see yourselves keeping up with, if you're making a Facebook business page, but you're not going to keep up with that Facebook business page and use it appropriately, just make sure that you're getting your name out there, maybe once a week on your Facebook or your LinkedIn. And obviously people who have, more of a marketing mind like yourself, they can dive into the different layers. And so it's definitely an animal marketing, but you just got to do what you can do.
That's all you can do, right? Actually, one thing I found super challenging was getting a Google My Business page up and running. So I had one at the last company I was at, and then when I moved over to Philadelphia Mortgage Company, which is a great company, by the way, I had my page disabled. So I was able to get ownership of that, but I couldn't get it back to being visible. I reached out to Google multiple times. I literally had to go into the office, take a video of the outside. I had to take like 10 takes.
I remember, yeah.
Every time I went there to take the video and to submit it, something would happen, like a technical error. Like I'd hit submit and then get an error box. Please do it again. So I'm out there coming in and out. I had to walk outside of the building. I'm walking out. I'm walking in. There's people sitting there working, and they're all looking like, what is this guy doing? I'm just like walking in multiple times, and then it just didn't work. So I'm like, I need this up. Like it's great to have a Google page up for SEO as well. Just, someone searches your name pops up, it looks good, right? So I finally get around to reaching someone who can help me. I sent an email, detailed, letting know what happened with the video. And one day I'm just like, all right, I wonder if my page is up. Let's just give it a long shot. Search it, boom, public. Up.
Wow. That's an impressive feat, because I've tried to get in touch with Google regarding Google business pages, and it's just not an easy feat. And I don't know why, because I feel like their customer service is probably pretty good for Google, but for some reason you go down the path of Google business page, God forbid there's a bad review, it's like you're not getting help on that. So
no.
I think there's even services. People literally have services to be like, we will work for you to help you if there's a negative review or something that you need to adjust on your Google business page. And it's just, these big tech companies, there's a million businesses on Google Business. So it's probably tough to get their attention. But
100%. And there's probably a lot of fraud too. I think why they give you so many hurdles to get a verified business is because there's just probably so much fraud, so many scams, so many tricks, where they just want to make sure the people who actually own a business, or if this business actually exists, they want to be 100% certain. So
I actually have a question for you, because you do it all really, really well.
Thank you.
What advice do you have for loan officers on having control of all of their marketing, having everything organized, and then finally the content creation of it all? Do you have advice for other loan officers who may be like all over the place, or one company created their pages and now they don't have access? Like, what would your advice be for somebody to like kind of get it all working together?
Well, I would make sure that you have everything first, because so first thing I would do is I'd make an account for everything. I'd make YouTube for shorts, I'd make Instagram for videos and pictures, I'd make a Facebook business account, your regular Facebook account, make sure you're sharing on both, and I would have a TikTok, obviously, and I would have at least those 5 or so, right? So how do you stay organized? Well, the 3 short form video content platforms I would recommend first are going to be TikTok, Instagram, and YouTube Shorts. Now, you can kind of change up the videos for all 3 of those, but they have to be short. People's attention spans, we're all victim to this. So over the last, 5 years or so, we've all just been accustomed to fast-moving content, right? So people's patience are lower than ever. They want the next dopamine rush. So make sure when you're producing these videos, they're fast, they're to the point, they have a hook, because people will just scroll on to the next like nothing. So I would recommend, if you're brand new, look around, go on Fiverr, find someone who can edit these short form videos. So if you're completely fresh, you want to get some content out there, go ahead, take some videos, talk about the world of mortgages, the world of real estate, talk about it all, and then get someone who's going to take your 5-minute clip and break it down into multiple short form videos. This is going to save you so much time, especially if you don't know how to edit. Like, I can edit because I edit all my videos pretty much. But I grew up on this stuff. I grew up as a 12-year-old kid messing around on Sony Vegas, editing videos, editing Call of Duty montages. Just I've grown up doing video editing just for fun. It was a hobby of mine. But if you really aren't good at that, make sure you hire someone. So I'd make sure you're putting short form content on those 3 channels, but really TikTok and Instagram, because that's where majority of your sphere is going to be located. And I'd also make sure Instagram and Facebook are connected too. So you can connect your Instagram with your Facebook account. It's your Facebook
same
business.
Company, right? It's both owned by Facebook.
Yeah, Meta. That's the name now, Meta. So it's under the Meta sphere. So you have Instagram, Facebook, and then your Facebook business. Those are 3 platforms right there that are pretty much all together. Facebook and Facebook business are the same, right? But
the big thing for Facebook business is the advertising capabilities, right?
Advertising capabilities, yes, that is the big thing. It's a little different than your Facebook regular. You might be sharing pictures of your family or more personal type content, which is good. It's great to connect, and I like to connect with a lot of people over Facebook, just because you like to see who the person is for who they are, and I think you should be sharing glimpses of that on all of your platforms. But Facebook, really, you want to show obviously what you do. I only share my content from my Facebook page because I want people to know. I want my cousin, or I want my aunt, or my high school friend who I haven't seen in 10 years to know, that I'm doing things and this is my business.
For sure.
Yeah. So back to your point, how do you stay organized with all this stuff? I recommend a content schedule. So if you're completely fresh and you have no idea how to start, go an Excel sheet. I'll do Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday. And I would put on the row each platform: Facebook, Instagram, TikTok, YouTube. And I would put a video, let's just start small. Do 2-3 days a week. Just pick 2-3 days a week. Do on every Monday and every Thursday, I'm going to do this on Facebook, this on Instagram, this on YouTube, this on TikTok. And then if that's too many platforms for you, start with Instagram. You start Instagram, Facebook. You can do TikTok, Instagram. Just make sure that you're constantly posting and making sure you're following people.
It's got to be non-negotiable. You got to say, you got to allocate the time. Start out small once a week, but it has to happen. If you go past that time and you're like, I couldn't think of anything, or I didn't have anything lined up, or I didn't allocate any time to figure out what I was going to post, you let that time go, and then 1 week turns into 2, turns into 3, and then you haven't been out there. And unfortunately, I feel like in this world, it's like, if people don't see you posting, they don't really know how much business you're doing, or if you're, still doing the business. So
yeah,
it's kind of a necessity.
I agree. I think that you have to stay top of mind. And social media is one of the top best things you can do to stay top of mind outside of outreach. So phone call, email, make sure you're also posting. It's not as direct, but it shows that you're out there, you're knowledgeable, you're an expert. If someone, searches my name and they see my Instagram, they see my Facebook, they see my YouTube, instantly they know that I am knowledgeable, I'm experienced, and I know what I'm talking about. So if you don't have, a digital, you don't have your digital platforms built out yet, it's not too late. Just do it. Just take the time to just sit down and plan what you're going to say. And if you have no idea, reach out to me. I will help anyone. I don't care if you're another loan officer or whoever. I will help you think of ideas and do this thing, because it's important, especially in our community, when so many people are leaving the mortgage industry because it is difficult.
Yeah.
The real estate industry is difficult. I will help you out. Just shoot me an email, text, whatever. Hey, Alex, I need some help with my social media. Do you have any ideas what I can post? And I'll help you build out systems on how you can post and think of ideas. And obviously, I'm not going to charge you anything. So just reach out to me.
The systems are so big. And the thing that you said that if you take anything away from this, like Fiverr, I use Fiverr so much.
Mm-hmm.
You have so much on your plate on a day-to-day. There's some things that you just need to allocate to somebody else.
Mm-hmm. And
Fiverr has so many people, in so many different fields they're there to do video editing, graphic design work, voiceovers. I've used them in the past for that. And so it's just a great library of freelancers that I think more people need to take advantage of. And it's not super expensive. I mean, there's different tiers, and you definitely just have to take some stuff off your plate because it needs to be consistent. If it's not going to be consistent, you're going to put out one dynamic ad or post, and then nobody will hear from you for a while.
Right. And it adds up. So if you're doing Fiverr and you're paying someone to edit your content, make sure you're tracking all of your leads. If you're not tracking your leads right now and you're a loan officer or a real estate professional, then you are seriously missing out. You're not as organized as you should be. You should be tracking every lead and where they came from. So if you're tracking every lead and where they came from first, then I would recommend maybe outsourcing some of your content, especially if you really don't know the ins and outs. So, and the reason I say you have to have all your leads tracked is because you want a return on your investment. Your content, your time is your investment, especially if you're dishing out, $1,000 to $2,000 a month on content. You have to know that you're getting a return on this for sure. So if you're, spending, a significant amount, you want to make sure that you're getting leads and return and outreach that are going to make sense. And while you're investing and getting clips, maybe learn how to edit a little bit. But really, the outcome of uploading this content and getting your name out there should increase your business where it pays for itself.
Definitely. No, I think it's all super important. I mean, the most dynamic content producers I've seen are people who know how to edit themselves or have taken the time to learn how to, they get their hands on a mirrorless camera and they learn the basics of filmmaking. A lot of people are like, I don't want to do that. Mm-hmm. But if you want to be super consistent, you don't even need that now with an iPhone. Sure. But I've just found that there's really, really dynamic content producers who are like, I'm going to learn the basics. I'm going to make my backdrop look a little bit nicer. And I think they get rewarded for that by getting a following. Obviously the content is king now. I
agree, 100%.
So where do you see marketing going in the future for mortgage, maybe the real estate sphere? What do you think is going to be the way to kind of capture more leads?
Honestly, man, AI. I know it's kind of cliche right now, especially it's kind of the hot trending topic, but AI is going to change the game. You're going to have, ads and different, lead gen sources. So a lot of loan officers and real estate people use Facebook ads and they use these forms. I think what's going to end up happening with marketing lead gen is that people are going to be talking to AI about qualification, AI loan officer. And it's too early for obviously, saying, oh, my job's going to get taken by AI, because I think that it is super important because a person's going to need to be there 100% of the time, make sure everything's going smoothly and everything's, accurate and correct. Not everything AI is going to be able to do as effective as, myself as a loan officer, another loan officer. But I think AI is going to take a lot of the basic questions, anything that you're maybe confused about the process, documentation requirements. I think it's really going to maybe take some of that. So I think that's how marketing is going to change a bit.
Yeah, I think automation is
Yeah.
like one of the biggest things right now. I think taking the small tasks, everybody every single loan officer wants an assistant to take stuff off of their plate.
Mhm.
And it's been a tough year or two here in the mortgage world. And so that might not have been an option, but people who are able to, grasp automation and take out small tasks and, get it flowing into get a lead, get them approved, get them into an application, and all that thing happening seamlessly, even communication through a CRM. I just think that's going to take a lot off of people's plates and allow them to go out and generate new business.
Yeah. And, honestly, for me, one of my favorite parts, if not my favorite part of this job of being a loan officer, is talking to people, getting to know people, building rapport with people. It's one of my favorite things. You learn so much in this job, not only about different, mortgage products, different things you can offer to customers, but you learn so much about people. And that's one of my favorite part about being a loan officer and doing this job is learning about people, connecting with different people, because I really value each client as someone who I'm going to be talking with for a very long time. These are long-term relationships, and I love connecting with each and one of my clients. It's one of my favorite parts. So if you take AI, and add to the equation, where does that leave that whole beginning part of the process? When I'm talking to someone for the first time, talking about them, where they're from, and the things they like to do, and about their work, and their favorite part about the job, and just different things. I like learning about people because you can learn a lot from just talking to someone.
For sure.
And you learn a lot about I know things about different topics I would have never known if it wasn't for me being a loan officer and talking to so many different people in different industries. But you add AI to the equation, what happens then? Does that leave the personal touch? Are you just someone who's confirming numbers for them, locking rates, and not helping them? So yeah, for me, I think AI is good for some of the basic mundane tasks, and it should be something as used as an accessory. But you as the loan officer, you should be really building relationships with people, because people don't trust AI.
Yeah,
people don't trust AI at all. People trust humans. And they trust you. They trust your brand. They trust your reputation. So maybe AI could be used in the form of getting people in the door. But once you get them in the door, you as the mortgage professional and officer should be taking them from there and helping them. Your job function is you are a mitigator of a loan. Once you bring them in, you gather all their information, you match them to the correct loan product, and you're from there, you're helping them. You're building relationship and trust with them. While we all know processing, underwriting, they do the chunk of the back end work, and you're there and you're more of the mediator through the whole transaction at that point.
Yeah, I think it's going to be a really long time until a loan officer gets phased out, or in the financial sphere, a wealth manager, whoever,
Yeah.
I think that personal touch is so important. If I'm buying a home, I want to be talking to somebody.
Mm-hmm.
I want to get their input on it. I think the personal connection is huge. And I think a lot of loan officers, their greatest marketing tool is taking the 1003 app. A lot of people like taking the online application now, but a lot of people they got their whole spiel down on how they're going to take the app and learn about their kids, their clients' kids, and what they're into. And you obviously get into the employment and what they do and how they got to that point. And so I think all of that is super important. I don't think it's going anywhere anytime soon, but I do think that adding automation to your day-to-day so that you can take out the mundane tasks, I think that's going to be the way forward.
I 100% agree. And they already have some of this. There's a program called LoanBeam, and a person is self-employed. You can put their tax returns into a system, and LoanBeam will come back to you within minutes and tell you exactly how much income they have, how much usable income they have in terms of, and it's all for a mortgage. So there already is automation with terms of income calculation, especially when you're using tax returns. But one thing I wanted to touch on, what you mentioned, was how you wanted to talk to someone. And when you were probably in the process of buying a home, you bought a home, 4 or 5 years ago, right? You probably had questions on the weekends or after 9 to 5 type hours, right? Maybe you had a question 7 o'clock, you shoot your loan officer a text, or a question on a Saturday morning. So one big difference between, and people need to realize when they're choosing their loan officer is, who is this loan officer and where does he work? Does he work at TD Bank, or does he work for a small independent mortgage broker? So there's a difference between a mortgage banker and a mortgage loan officer or mortgage broker. And the first one is someone who gets paid a 9 to 5, a salary, maybe no commission or a small commission, but they work 9 to 5 regular banking hours. But when you have an independent mortgage loan officer like myself, we're 100% commission sales. So we're highly incentivized to accommodate to your schedule. So we don't have a salary to fall back on. So we're working after hours, we're working weekend hours. We really make the experience personable and we work for you truly. So that's one thing I like to always, tell my clients is, hey, when they're like, hey, Alex, I'm so sorry for texting this late, or I'm sorry for contacting you. It's Sunday. Like, it's okay. I'm working for you. Like, I'm not, this is not a traditional 9 to 5. We are working all of the time. And as much of the times we do work and as much hours we do work, being a loan officer does give some flexibility, right? So I would say when you're choosing a loan officer, ask them, hey, are you a mortgage banker or a mortgage loan officer? And, a lot of times if they're a mortgage loan officer or a mortgage broker, are you a broker? Then they are set on their own and they don't have a salary to fall back on and they will work really hard for you. I've noticed.
Yeah. Well, marketing only takes you so far. Then it comes down to the service and you got to have it. And the communication has to be there. And the way that you're going to get the most referrals is by people having a great experience with you and then telling their friends and family, hey, Alex was on it. He got back. I was calling him at 8:30 at night after my shift ended, and he was right there, walking me through the whole process, and I got a great rate in the process. That's the most important part. So, it all works in tandem, but you're a phenomenal loan officer, man. You're like super.
I appreciate that, man.
Super great with communication with all of your clients and referral partners. And so
appreciate that.
You're the whole package. That's what you need to do.
I know, man. I appreciate that.
Yeah, man. Yeah. It's what you need. It's what you need in order to stay in business these days.
Yeah, you're spot on. And like if I was in the shoes of a home buyer, right? I would definitely look at a few different options as far as what I would do and what I would not do as myself being a mortgage loan officer. When you're choosing a loan officer, here's some things I would really look for being a loan officer. So a lot of people, look at just the numbers, the rate, but most people don't realize that there's a lot more to a mortgage than just choosing someone by the rate. You're choosing service, you're choosing who the loan goes to or not, servicing, right? A lot of times these loans are, sold on the secondary market, but you can also find out by your mortgage loan officer where the loan is going. Not that that matters to some people really care, but I would really ask the loan officer, a few simple questions, all right? And, some of the stuff I would mention, especially to the loan officer, is, really ask about the terms, right? So I'd start with the rate, obviously, but that's not everything. Make sure service is there and really get a good feel for the loan officer. Is this someone that is going to walk with me down these next 30 days through a stressful and emotional process? Or is this someone who's going to make it worse? And you can kind of get a good gist for someone and how they do business within the first week of talking to them. Do they return my calls in a timely manner? Do they respond to my emails? Do they give me helpful, insightful responses? Are they short with me on the phone? If you're getting bad vibes, I always say trust your gut. If you're getting bad vibes from your loan officer, then I would highly recommend maybe talking to just a couple others just to see maybe you vibe or have someone who accommodates you a little better. And especially if you're self-employed, you might have a below average credit score. You might need some extra help in this process. Your first time home buyer, even if the rate might be, let's just say, a quarter of a point higher. If it's a 6.25 instead of a 6%. I would really take into account that maybe I need someone with this experience or who I tried with a little better who's going to help me through this process. So really look at who the loan officer is. A lot of people also mention locality. So I work at Philadelphia Mortgage Company. When you think of Philadelphia Mortgage Company, you think of Philadelphia, Pennsylvania, right? So I think locality is important. Really knowing your local market and working with someone in your local market. But I do think that if you're going to work with someone who's not in your local market, I think that that's okay. A lot of people and a lot of loan officers say, don't do that. But I've worked with so many people in so many different states, especially Florida. I know so much about Florida. I've been there so many times. I know all the different real estate, procedures and rules in the state of, just Florida as an example, where I feel 100% comfortable doing a loan in Florida and helping a family there as I do in Philadelphia. So I think really trusting your loan officer, knowing who they are, how they can help you, especially if they have a relationship with the realtor you're working with, I think that is the most important when choosing a loan officer. So that's one thing. As a loan officer, what I would recommend you doing, get to know the person. Obviously, make sure they have competitive. If they're not competitive at all with the terms and rates, then I might love the person, but I would shop around just a little bit. You don't want to way overpay. But if it's just slightly different, we're talking maybe a couple $100 or just a little higher in interest rate, maybe consider the other person. So that's my little bit of advice, because you're going to be selling that home probably in the next 5 years, 7 years anyway, and the amount that you'd save is not going to be as much.
Of course. So you talked about some things to look for in a loan officer. Yeah. What are some red flags that you should be, maybe somebody going into the market should be concerned about?
People are getting scammed when getting a mortgage. And you cannot believe that this is happening, especially after the real estate crash of 2008. So one of the most common scams that I see as a loan officer that especially big box retail lenders are doing is they're getting you in the door and they're sending you a loan estimate. Every loan officer and every mortgage company has to send you a loan estimate. But if you look at the top right, you'll see whether or not the interest rate is locked or not. If the interest rate is not locked, you have to ask, why is this not locked? Not just, everything looks great on here. The interest rate is great. These terms are amazing. If it seems too good to be true, a lot of times it is. And this is what's called a bait and switch. So what will happen is you'll be like a week out from closing and your loan officer like, hey, the market changed. And instead of the 6% rate, you actually have an 8% now.
Yeah.
And it's disgusting and it's terrible and it gives this industry a terrible rap. But, most people most loan officers are not like this. But unfortunately, this happens in this industry still.
It happens a lot more than I think people think. And it's the dirty little secrets you learn about when you get into the mortgage industry and you're trying to compete, you're trying to win deals, and you're offering in good conscience, you're like, this is where I'm at today. This is what I would be able to give them today. I know they may not lock today, but I'm going to be honest and forthright with them. And then you'll get a loan estimate. And they say, so I went to this loan officer and they turned around and they gave me a rate that's a half better or something crazy. And you're like, man, I would ask if you can lock that loan, know, and then all of a sudden you'll hear them backtracking. Oh, the market, all this and that. Right. And so it's like, yeah, unfortunately, baiting and switching is pretty common. So you got to be careful.
Have to be careful. That's one of the most common predatory practices in this business. Actually, funny enough, you said in good faith. So before the actual name of the loan estimate, that document, that piece of paper was called the loan estimate. It's called the good faith estimate. So it was before I was in lending. This was years ago. But I actually like that name a lot because this shows that the loan officer and whoever's giving you these terms is in good faith. And unfortunately, there are a lot of loan officers who are not in good faith of the client. So make sure, like I said in the beginning, make sure whoever you work with, look into them. Who is this? What company do they work for? Do they have reviews? Are they knowledgeable in their field? Do some research. Don't be afraid to use Google and look some of these loan officers up. Make sure that this person's a good fit for you, who's going to be trustworthy, who has the reputation, who has the brand. Work with these type of people because it's going to be so beneficial for you in the home buying process. You'll notice it's smoother, it's seamless. This person is really caring for you through this whole thing, and you're not going to have to worry about getting bait and switch. If you get a loan estimate and it's not locked, say, "Excuse me, Mr. Loan Officer, why is my interest rate not locked?" And if they say, "Oh, well, the market, I think next week, blah blah blah," be super careful. If you're going to play around and float your interest rate, don't wait. If you have a 30-day contract, don't wait till day 15 to lock that rate. If you're going to wait, I would maybe wait a week or maybe 10 days at most, because at that point, you're risking yourself, if you are getting tricked, It'll be too late to switch.
Talk about this concept of floating interest rate.
Yeah. So, I mean,
because I've heard hilarious stories, not so hilarious for like the client or the loan officer involved, but like sometimes it's a bad way to go about business. But sometimes loan officers will say, I think the rate's going to drop in a day or two, and they'll let it float, and they might tell their client, no, you're good to go. We locked it. And it's basically gambling.
I don't gamble with people's money, other people's money. That's,
of course.
It's ridiculous, right? So unless you're 100% confident you're willing to honor the previous day no matter what, I would never recommend to float your rate. I would say once you're under agreement, I would go with that day's rates. And you might be thinking, oh, well, the Fed meets next week, blah, blah, blah. The Fed might be meeting next week to increase the rate.
Yeah.
Don't listen to the news. No one has a crystal ball.
Nobody knows which way it's going.
No one knows which way it's going.
When you hit that comfortable monthly payment, you're good to go with it.
I love that. Exactly.
Just got to lock it in.
Yeah, if you're comfortable with that number at the bottom of a locked loan estimate, if you're comfortable with that monthly payment, I would go ahead and go with that, because you never know what's going to happen in this crazy world. And if your rate increases by, a half a point, quarter of a point, you're looking at another, extra month. I think of it this way. Would you rather have that money in your pocket to, treat yourself and your partner to a nice little date? Or would you rather be paying that interest to the bank? I'd rather be taking that money and enjoying myself.
Yeah.
Or saving or using it for something else.
Yeah, I've heard horror stories of loan officers losing their shirts because they were playing around with locking in an interest rate. So it's not a good way to go about business. And when you're comfortable, lock it in and be done with it.
If you really want to be a hero as a loan officer and you really want to play around with someone's loan in their home, do not mess with the rate. I don't care if you think, oh, the rates are 100% going down on Wednesday. I'm going to wait to lock them in. If that doesn't happen, you're going to have a way harder time with building trust with your client or your customer, building a relationship. Someone's not going to trust you. If someone did that to me, if I was on the side of the consumer, like, yeah, my loan officer, yeah, they didn't lock in my rate. They said, oh, by the end of the week, it'll go down. And guess what? It didn't go down. It went up. Would you want to work with that person again?
Oh, it's horrible.
Horrible. I don't care how the rest of the process is. I just be like, you know what, man? You were a nice guy. I know you were trying your best, and the rest of the process is great. But honestly, I wouldn't recommend you. I wouldn't. So I think most people feel that way.
No, it's crazy. So I was just talking about it's kind of crazy. Some of the stuff that goes on. Have you had any experiences with a transaction that kind of was just a unique experience or something a funny occurrence that happened throughout the mortgage process for a specific client?
You know what? Like every loan or every transaction has something to it. There's no cookie cutter transaction where everything goes the same way. And being in the position I'm in, and as grateful as I am to have had many different opportunities to help families and individuals with their loan, I would say, some of the crazy stuff I've experienced is, a lot has to do with appraisals and different things appraisers come back with. So appraisals are done. I don't know, I'm sure you're familiar with appraisals, but appraisals are done by third-party people who are unbiased, who are in a panel selected by the lender. So these are different. It's kind of like a lottery system, who gets the appraisal and who gets to do it. But you don't know who's doing it until after, and then after it's done. But I've seen sometimes before where, let's just say, one lender had an appraisal done. And, whatever happened, it didn't work out that lender, then they come to me. I look at the appraisal and I'm like, all right, well, let's get a new appraisal. Let's get a new appraisal, everything done. I've had a situation where I had a customer have an appraisal done. The appraiser came in at $220,000 for the home. That's how much they say it's worth. So the appraiser comes out, they give us a value, and they let the bank know that they're not lending on a house that's not worth what they're buying it for. So if you're buying a house for $300,000 and the appraiser said, no, this house is only worth $200,000 or $220,000, the bank's like, wait a minute, I'm not going to give you this money for a house that's not actually worth $300,000.
Of course.
So they're doing their due diligence. So I had a situation where a customer came in, they're buying a $300,000 house. The appraiser came back and said, no, this is only worth $220,000. And And this is what the client was dealing with at another lender. So then they send a rebuttal. They, were like, hey, it's actually worth this. Came back. All right, we'll give you $230,000. So their loan they couldn't bring them extra money. So they're like, all right, we have to try another lender. So they tell me what happened, the whole situation. And not every appraiser is the same. So no problem. We'll order an appraisal. We'll give it a go. We only had 2 weeks. If this loan did not close in 2 weeks, they would lose the home completely. So they came back. We got the appraisal ordered. Guess where it came in? $300,000.
Wow.
So sometimes you have appraisers who
It's a
are
world of difference.
stuck in their opinion. But real estate value has gone up so much in just the last 2 years, especially even since the last fall. All the big players in the real estate market were forecasting no growth in the real estate market since like November of 2023.
Yeah.
Since then, I think it's been like 5% increase in just like less than 6 months.
It's unbelievable.
Unbelievable. So yeah, I would just say like one big thing, and some of the crazy stuff I see are from appraisals. But yeah, as far as like the process and everything goes, if you know what you're doing as a loan officer and you're the captain of the ship and you're like, all right, this is what we need. Here's how we're going to structure the deal, and you're matching the client with the best product for their situation, you shouldn't be coming across so many different obstacles in your journey, in my opinion.
Yeah. So you mentioned appraisals and like the cost of housing, how even when rates jumped up, people are thinking like, housing, the cost of housing can't possibly go up even more.
Yeah.
And real estate keeps appreciating.
Yeah.
What do you think is going to happen here in the future? A lot of people are worried that there's a housing affordability crisis.
Yeah.
What do you think that there's going to be something done? Where do you think real estate is headed, or mortgage lending to try to ease the pain of a first-time home buyer who has some student loan debt?
Yeah, I mean, that's a tough one, man. I really think that there are so many low down payment options for a client. Like I can help a customer. I can literally get someone into a house with 1% down with no mortgage insurance on a conventional loan. So you have amazing products. I have another loan product, an FHA loan, where your minimum 3.5% down payment is given back in a fully forgiven grant. And you can get a full 6% from the seller to pay all of your closing costs. So I have so many different programs to help people with the down payment. And a lot of the Fannie, Freddie, especially Freddie and Fannie for FHA loans, they allow 0.5% on your student loan payments. So if you owe $100,000, we only have to count 0.5% for your actual payment. So that helped a lot. It used to be 1%. They changed that. So I mean, yeah, there's definitely been some leeway from the big players. Fannie Mae, Freddie Mac, and obviously the federal housing. But what I would really say for people is the big downfall is the debt to income ratio. So how can you make more money while the houses are going up, the rates are higher than they have been? How can you afford to buy a home and you have, because everything else went up with inflation, you now have credit card debt. You now have a higher car payment. Your car payment went from $400 a month to $800 a month. So you have all these added expenditures. You're stretching more, and then you look at statistically, your income has not gone up with inflation. So I would say, if you're looking to buy a home, I would really focus on getting your debts to a manageable amount for your income. Really focus on paying down your debts. If you have to wait an extra year to save and pay down your debts, it might be worth it to do. And consulting with a great loan officer will work with you if you're in a nurturing type relationship. If you need 6 months, don't be afraid to reach out to your loan officer. Like, hey, I don't know what my situation is like. I don't think I'm ready. How can I buy a house? A great loan officer, we know what they're going to do. They're going to give you a roadmap on how to buy a home in a reasonable amount of time. So make sure you're working with great people. But yeah, I mean, I think to really answer your question, I really think inflation and the rise in real estate prices have really made it where if you want to afford this home, either you're making more money and you're having and you pay off your debt or don't have any debt, or you're going to get married and you're going to buy with someone else or your friend. I mean, listen, I bought my first home with a childhood friend. We've been friends for a long time, so
I've seen
made
that
sense
happening a lot.
Yeah. I think you told me
Yeah, my buddies. Shout out Derek. Tyler, what's up? No, yeah, they bought a place in Fishtown. And it's turning out to be an awesome investment for them. And their mortgage was like, they each three chipped in with their savings to, get the down payment together. And they had a mortgage on like a pretty nice house in Fishtown. And their mortgage was like $1,500 split between three guys.
Wow, that's
they were
amazing.
paying $500 a month.
Amazing.
And I'm like, it was an awesome investment for them. They still have it.
Yeah.
And they're renting it out to somebody else. So I do think that figuring out creative solutions to home ownership is probably going to be here to stay for a little bit.
Yeah. Unfortunately, with the times, you have to make more to afford a home right now. That's the unfortunate truth. But I think a lot of people's expectations of what they can buy for the amount have also gone up, because you look at yourself like, oh, this is a $200,000 house. That was a $200,000 house 3 years ago. It's not a $200,000 house anymore. It's a $275,000 house now.
It's insane.
So, yeah, you really have to lower your expectations. If you make this certain amount, unfortunately, this is what you're going to have to qualify for.
I think people are messed up, screwed up, because they saw what their parents could afford, and they saw what $400,000 bought them in 1980 versus what $400,000 will buy you today. And so I think people struggle with that. But yeah, I think it's a big part, and it's not what people want to hear, but you got to tailor what you're looking for. I mean, if your dream is the big house with the picket fence and the big yard in a decent area, good luck finding anything under, $500,000, so it's like, you have to tailor your search. You have to be a little creative. You have to look in some areas that you may not have first thought, hey, I could see myself living here. But yeah, you just got to be creative about it. But do you think that, builders going forward, I don't know if I've really seen this, but are going to be, targeting land that's a little bit further from the cities, making housing that's maybe a little bit smaller and more affordable? Do you think that's on the horizon or no? Yeah,
I've seen it. I saw a community, I think it was in Texas, where the homes start at $150,000.
Wow.
So there's a ton. It looks like if you looked at like Levittown, Pennsylvania, or like Levittown, New York, but even smaller yards, smaller, closer together, $150,000. I think this is a great idea. Like I worked for a home builder. I was not on acquisition team or anything like that. I was doing mortgages like I'm doing now. But you think about, all right, if you're a builder, right? You're a Toll Brothers, you're a Lennar, you're a Ryan Home, right? NVR. You're gonna think like, okay, how can we make the most money possible, right? So if you acquire land, a lot of these companies, like the big home builders, they're a land acquisition company. So they sit on tons of land. They have a bunch of land. So you're thinking, how can you get the most dollar amount return on your land? And especially in the Northeast here, a lot of return we've seen are big, expensive townhomes.
Yeah.
They're going up everywhere, townhomes.
I've seen it all over, yeah.
They're still doing single-family communities, but I've seen so many townhome communities go up. And these aren't the townhomes that you're thinking are like affordable, like for a lot of different people, right? Especially the younger generation. These are townhomes that are priced like $600 plus to start. Just to start. And me working in the home building space, when you're looking at a house at $600 to start with additions, all the different add-ons and everything like that, you're really looking at like $657 just to hop, just to go in the door. So,
yeah, I don't know, man. It's tough. Housing prices are up, and I think that there's going to be more and more building in the burbs. Any land that's available, I feel like they're going to build on. Just because.
I would think so. A lot of the land too. I don't know how it is in maybe other parts of the country, but especially in the Northeast and around here, a lot of land, especially in the suburbs, is preserved. A lot of it has different rules and regulations, which I think is good. There should be a good amount of green space. But I would love to see something, especially in these high cost areas like New York, North Jersey, Philadelphia's getting more expensive, but was a less expensive option. Still is way less expensive than New York.
Yeah.
But I would love to see an option for the people in these communities to increase home ownership. I would absolutely love that if home builders just built something, where I wouldn't mind living in a more condensed area, but you're at least getting a return. You're not renting and paying someone else's mortgage. You're at least getting a return. So if there's a community of homes that start at $200,000, $250,000, at least people can buy those. They're getting a new home, and they're able to be, in a comfortable brand new house community. I think that would be awesome. And I think if there's a a way for builders to make turn a huge profit on that? I think that there is. I would think that would be a great option.
Yeah.
So I think, I don't know. You tell me. I mean, if values keep, you think?
I'm not an expert, but
Dude,
I just think about it.
Yeah, I mean, how many people you think can really afford, $1.5 million home? $1 million home, $800,000 home. How many of your friends who are 30 years old can afford an $800,000
No, listen,
house?
I mean, it really comes down to, are you probably getting help with that down payment? I mean, is there people in your family that are going to be helping you, amass a sum of money, that a gift, something, to help you get that down payment? I mean, there are plenty of low down payment options, but then you look at what your monthly is going to look like, and it's, exorbitant. And so, unfortunately, and then I think you hit the nail on the head with debt. I think student loan debt is running rampant, and I think that people need to hunker down and pay off their debt. You have to just say, I watch everything on YouTube, Dave Ramsey, Snowball, all that
Dave
stuff.
Ramsey, man.
And
some great knowledge.
I mean, he's great. I mean, say what you want. People are so divisive about how he goes about trying to build wealth, but like the snowball effect with like getting rid of debt. Like,
that snowball, yeah.
I did it, and it works, and it's tough, and it takes a long time.
You pay the smallest debt first into the larger debt, the smallest to largest?
Yeah, smallest debt to largest. I find with, I'm not like a huge Dave
beans
Ramsey.
and rice and beans.
Yeah, I'm not like crazy about it, but I do think that he really hits on the mental.
Yeah.
Somebody who is analytical is going to say, no, pick the credit card with the highest interest rate and get rid of that, no matter how big the balance is.
Yeah.
But he's like, no, get the smallest balance and get rid of it, because mentally you're like, that's a freaking win.
Yeah.
And so you just need to keep brick by brick getting rid of debt. And I think that it's huge to try to get rid of debt prior to buying a home, and it'll help the monthly payment and all that. So
I love stuff. I don't know. I really love and this is going back to the psychology point. Do you really think you're going to beat American Express? You think all the analysts and all the different people who've built out these cards with the points and everything, are you going to beat them? Absolutely not.
Yeah. And
they're relying on the psychology. If you have a credit card, you're going to be using it more. You're going to be buying more things with these. It's not like if you have $100 bill in your hand and you go to a store and you get no change. You spent the $100. You put in your card, nothing. You don't have to think. I have my Apple Pay set up. I just boop, boop,
it's crazy.
You're done. You know what I mean?
I look at personal finance a lot through like the mental side of things, and in the mortgage world, and like I would love the idea of owning an investment property one day, and it's like, just because maybe you can, like right now, it's probably not the best time, because like you think about, it all makes sense. And I'm not saying like, I think real estate investing is phenomenal.
Yeah.
But like, you got to be in the right mental headspace to do it. If you sit there and say, well, it makes sense, I'm cash flowing a couple extra $100, I found this great deal. And it's like, okay, well, what if you go 2 months without tenants?
Right.
And
I
you're
agree.
Sweating, and you have 2 mortgages coming out of your bank account.
Right.
And you're like, you got to think that extra step through. And so I'm big on the mental side of personal finance. I think that you have to be super confident that you're going to be able to handle whatever you're taking on.
It all comes back to debt to income, right?
Yeah.
How much debt do you have to income? I think a lot of people and a lot of the hype on social media and marketing is due to getting your call. I think a lot of people, a lot of the hype on social media and marketing is, okay, you're going to buy a house at 3.5% down with an FHA loan. You're going to live in it for a year. Then you're going to rent that home and do it again. And then you're going to do it again. And then after 5 years, you're going to have 5 different properties. And then you'll have all this cash coming, blah, 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 all the appreciation. Okay. Could that work? Yes. The likelihood
if you're
of
a monster, if you're an animal and you are
there's so many
organized.
uncontrollables too, though. There's so many uncontrollables. What if you have a tenant who doesn't pay their rent? Or what if you have an unforeseen circumstance? Or what if something you don't know what could happen? Like the whole, the new house here needs a new water boiler, or you have another house here who needs a whole new HVAC system.
Yeah.
You have all these huge expenses coming in. You have 3 different homes. You're stretched out. You're bought all these homes with
you spent all your money on the down payments.
Right. So
you didn't allocate enough in case something were to happen.
Right. So I think a lot of people, when they look at investing, they're looking at a point, well, how much can I stretch?
Yeah.
Do not look at it. Real estate is one part of the pie. You should, have your funds and investments allocated in diversification, right? As the great Warren Buffett, you should be diversified. Real estate is one asset class that you should have, but it shouldn't be an asset class that owns you.
Yeah.
The
worst thing you want to do is be in a position where your stomach is in knots. You need to run all the numbers on all the variables and have assets set aside in case something goes wrong, or if you have a tenant that isn't paying for 2 months.
Yep.
And I'm not knocking real estate investing because it's like a dream of mine, and
me either.
One day hopefully, but you got to take everything into consideration, and I think the mental piece of it is so important with investing, with real estate, with all of it.
Agreed, 100% agreed. So yeah, man, I really enjoyed our conversation. I think we really went over a lot of stuff.
Yeah, man. Well, we're thrilled to have you aboard here at Philadelphia Mortgage Company, man.
Yeah, man.
You're a phenomenal loan officer. We selfishly are excited to have a younger loan officer on the team. Now we have, more than one. But yeah, man, it's the mortgage thing. It's kind of an aging demographic for loan officers. And so it is pretty rare to have a younger loan officer who's just absolutely crushing it. And so
I appreciate that, man.
I think it's a testament to you and your hard work and how you go about the business.
Yeah, it's not a business of instant gratification. It's a lot of delayed gratification. You're gonna have to work hard. You're gonna have to take a significant amount of calls, make a significant amount of calls. But I promise you, you will feel the rewards and reap the benefit. And if you truly like working with people, helping people achieve I still like to say the American dream of buying a home, then this industry is for you. So. That's what I'd like to tell anyone out there who might be interested in becoming a loan officer.
You need a house, man. You need some mortgage financing. Alex is the guy.
Seriously, I answer all calls. If I don't answer, that's because I'm on the other line. But text me. My number's out there. Feel free to give me a call, text anytime. I will chat it up with you if you're ever interested in becoming a loan officer. Have any questions about real estate, buying a home, getting a second mortgage, a HELOC, HELOAN, anything like that. Let's talk.
There it is, man.
Appreciate it.
All right. Thanks for having me on, Alex. I appreciate it.
Thank you.